this video, we are going to talk about how to spot the right fair value gap or order block to trade with. I got questions like this a whole lot. How do I know that this is a valid order block, or how do I know this is a valid fair value gap? In this video, I'm just going to walk you through how I do it personally. Maybe it can be of help to you too. All right, so let's go straight into today's video. Okay, the first thing I want to say is, now you want to understand the structure of the market first, because that's the first knowledge you need to understand how the market works. You will just want to understand the structure of the markets, like this structure here, low, high, if it's to the upside, something like this. You just need to be familiar with how the market moves first. Okay, and if you haven't watched a video like this, if you haven't watched my video on market structure, I'll be leaving the link in the description. It's actually a detailed video that will help you in understanding the structure of the market. Okay, now so you can see here, it's always good for you to spot your point of interest on the higher time frame first before you go down to the lower time frame. First thing you have to do is just for you to understand the swing. If it's to the downside like this, you want to look for opportunity around this point to enter a trade leading to the downside. Okay, this is on H4 4 hours time frame. It's always good for you to understand what the higher time frame is doing and get your analysis time frame right. Okay, now this is on 4 hours time frame. What I will do is to use my fib and draw from this point to where we have the swing like this. Okay, this upper part here is called premium, all right, and this down part here is called discount. For a sell trend like this, if it's to the downside, this upper part is called premium and this is a discount. Let me just show you something here. If you are drawing it from if you are having a swing highs and swing lows like this, okay, and you are drawing and you are using your fib, what you are going to do is to place it from the down part like this to this upper part like this. Okay, so this down part here is what is called a discount. If it's to the upside, if you are seeing a series of higher highs and higher lows pointing to the upside, right? I don't know if this makes sense, but if you are identifying your swing to the downside like this, right, this is premium. Okay, but if you're identifying your swing to the upside, the one down is called a discount. Okay, now let's continue. Let's say you just spotted this swing from here to here and you just see the trend pushing to the upside like this. Your point of interest should be from this 50%, which is also called, is a midpoint, but ICT called it equilibrium. From this 50% up is where you start looking for opportunity. Now from this 50% up, what can you see? Okay, the first thing I can see here is this order block here, right? This order block here. So I'll map out the order block. This is going to be my point of interest. And remember, you have to spot your point of interest at the premium. From this 50% equilibrium point up is where you want to spot your point of interest. The reason is that getting a fair price at this upper part is better, right? Is better, like it's cheaper when you pick a trade around this point and you are targeting the down part. It's cheaper than when you are picking a trade around this point. Now that I've identified my point of interest on 4 hours time frame, what I will do next is to go down to a lower time frame to see how price is going to react to this my point of interest. Okay, now let me go down to 15-minute time frame. So this is our point of interest that we spotted on 4 hours time frame, right? What I want to see is a shift in market structure. Okay, what I want to see here is a shift in market structure. Okay, let's take for example, this is how the market moves, right? If it's to the downside, you see something like this, and if it's coming to the upside, you see on the lower time frame, you are seeing a structure like this coming up to that's your point of interest. Let's say this is the point of interest you just identify. Okay, this is the point of interest you just identify. So on the lower time frame, you want to see price approaching that level, and the next thing you want to see is price giving you a shift in market structure like this. Let's say price just approached your point of interest and you see something like this. giving you this kind of structure or this kind of market pattern, this kind of structure. So when you see the market giving you this kind of structure around your points of interest, this is what is going to give you like a confirmation. Okay, the market has gotten to my point of interest and is actually reacting to it. I want to look out for an entry around this point. Okay, I don't know if that makes sense. Now let's go back to this. You can see here, this was the point of interest we spotted on the 4 hours time frame. Now we are in 15-minute time frame, so we want to see how price is going to react to our point of interest. Okay, now look at this one. This was where price reacted the first time, but you can see that I did not even get to our point of interest which we outlined, which was the order block. Right now, this is actually where the price came to. You can see here it was pushing to the upside. We have this shift in market structure here. Now let me zoom in so you can see this properly. Let's say we did not see this one coming. Let's say this was actually what we saw here, swing low, a swing high, got it just at this point, and we saw this shift here. All right, so seeing this shift in market structure around my point of interest, what I will do is to outline the way we have the shift in market structure or change of character. You can call it a change of character. So here is a change of character we've spotted. Okay, now after spotting this change of character, you can see here we have a fair value gap here and we have this order block here. So if I want to pick entry here, I actually did not pick this entry, but I'm going to show you the one I picked. If I want to pick this entry, what I will do is because I'm looking for shorts, what I will do is maybe to wait for price around this zone here, and my target will, where I'm going to place my stop loss will not be here, because the market can just come and take me out here. I want to place my stop loss up here, this last swing here. I want to place my stop loss up here, so I will just target here and place my stop loss up here, and my take profit will be down here from this point. This is where my take profit is going to be. If you are watching the video and you're yet to subscribe, please just consider smashing that subscribe button. Just click on it. Thank you so much. And also give this video a like. Thank you so much. I know you just clicked. Thank you so much. God bless you. So now let's continue. So this is what I'm going to do now that I've seen that we have a shift in market structure. Let's say I did not even see this one coming. This is where I'll place my stop loss, and here is going to be my target. So you can see here the market, yeah, it's traded all the way up to this point before it started pushing all the way down. Okay, before it started pushing all the way down here. Now let me identify another one. Let me just delete this and show you another entry. Now I'm going back to H4. H4 is the time frame I would like to see my swing. Sometimes I use H1. Sometimes I actually use H1, but using H4 is actually better than H1. Okay, so now this was actually the swing we identified. The swing we are only interested in, since it's to the downside like this. This particular one here is pullback. This pullback is when you start looking for entry, but the main swing you are paying attention to is this swing here. So is this particular swing that you are more interested in to place your fib, okay, and drag it to the downside to see where price will likely want to respect, okay, as we are having like a pullback. Okay, now let's go back. So this swing here, from this point to this point is the swing, right? So I'll place my fib from here to this point here to see where price is likely going to respect. I like adding like extra conference to mine. Let me show you. I like adding this order 61% and this 78%, just to have it's just, that's what I like to do. Right now you can see that where did price respect here, 61. This is just like another confluence to me, but this one is just extra for me personally. But let me just take it off so we can start identifying our point of interest. Let me just take it off first. Where is going to be our point of interest? Now we start analyzing from this part here, from this equilibrium up is where we start looking for opportunity. Okay, now let's try to spot fair value gap or an order block. Now we have this order block here. Most times the market will not just get to the order block. It's just for you to get familiar with everything, because I got comments like order blocks does not really work for me, and I think I'm going to make like a video about the 7 institutional reference points according to ICT, so you can just have a knowledge about how it works. Okay, now after this we can see this order block here, but apart from getting to this order block, there are some things you need to see first even before price gets to the order block. Now let's identify where you can spot like a fair value gap. Here, this is the first one here. You can see here we have a fair value gap here, so you just have to map out your point of interest from here. Here is a fair value gap. There is another fair value gap I'm seeing here, which is this one here, and after this fair value gap we have this order block here, which is this one here. Let me just map it out, because if I should map the whole of it, it's going to confuse you. So let me just map it out like this. Now this, we have a point of interest here, we have another one here, and we have another one here. If you don't want to be missing out on trades, let's say maybe you're just waiting for it to get to the origin, which is the order block, before you pick an entry, but sometimes you find out that price just left you behind before it starts pushing to your direction, I don't know, or something. So now you've identified this point of interest, you've identified this one, and you've also identified this one. The next thing you are going to do is to go down to the lower time frame. So now I'll go down to the lower time frame. I actually picked this entry. Let me show you what I did. Okay, to go down to the lower time frame, here on the lower time frame, look at, is this first point of interest that price is actually reacting to. Remember here it has gotten to the premium, so from this 50% up, you can identify you can spot your point of interest from this 50% up. Okay, it can be anyway, it can be like a fair value gap or order block, since sometimes you realize that market does not really get to your order block before pushing to the downside. Okay, so now you can see that price has gotten to this premium. All right, so what you want to see around your point of interest is for price to give you like a shift in market structure. You can see here that the market was pushing from the upper parts. Here we have this shift in market structure here to the upside. We have this pullback, and we have this high, this one, a swing low, swing high, and we have a shift in market structure at this point here. Here is a change of character you've spotted. Now the next thing I did here, I actually picked this trade. This was last week. Today is Sunday, yes. Here, and the next thing you are going to do is for you to look for an opportunity. From here is for you to look for an opportunity to pick an entry. Now you can see that here we have like an order block here. We have another block here, but there is no fair value gap here, and we also have this origin here, which is also an order block. What I did here was, when I saw this and I saw price approaching this point, I just picked an entry here. And also we have something called a breaker block here. This is a breaker block at this point here. I think I'm going to make a video about a breaker block, mitigation block, and the 7 institutional reference points to help you understand this part too, at least for you to just have a basic knowledge about all this, because they are important. Okay, so if you haven't subscribed to my channel, please just consider smashing the subscribe button, so when I start making videos about that, you would be notified. Okay, and make sure you turn on your post notification so you can be notified each time I post the video. All right, so now you can see here we have this breaker block here, and price just retraced into the breaker block and started pushing down. So here, what I did here was I picked my entry around here. This is short. I just picked my entry, I think it was around this point here. I picked my entry around here, and my stop loss was here. Some people like, your stop loss is too big. Yes, all I do is I try to reduce the lot size I'm using to fit in the amounts I want to risk. Okay, now we have here, and my target is here. So now let's bring this down to this point here. So this is like 1:2.4 or thereabouts. Okay, so here you can see here that price has given us a shift in market structure. The main message is when you spot your points of interest on the higher time frame, go down to the lower time frame. As you're coming down to the lower time frame, the only thing you're looking for is a shift in market structure. A shift in market structure is what you want to see, and the next thing is how price is reacting to your shift in market structure. If you really want to wait to have like maybe a good entry, you can just maybe use your feet to identify from here to here. At the 50%, you can just put your sell limit at that point and wait. If price should come, the price will just tag you in and you place your stop loss just above here. Okay, so that is basically it about this video. If this video was helpful, please consider subscribing to the channel and give the video a thumbs up, at least to show your support. Thank you so much for watching.